Hi, okay, we do the paper one. This is paper 2022, February, March. Question number one. Okay, what is prepared by bookkeeper? Bookkeeper, the key job is doing the detail recording. So what they do, first, book of prime entry, which is all the journal that they prepare. They have to prepare all the book of prime entry. And then after from the book of prime entry, transfer to the ledger. Next, go to the trial balance. So this is the key job of the bookkeeper. So appropriation account actually is under the partnership and also the company account. You will have a appropriation account. This is not. Okay, cash book is part of the book of prime entry. So the answer should be B. Which item is an asset? Asset is belong to the owner or owned by the owner or owed to the owner. So there are three things: owned by owner or owed to owner, okay, or the capital invested also can. Capital invested. Yes. No, sorry. This one they talking about the asset only. So capital cannot. Capital is go to the cash or the bank. So here, asset, an amount owing by credit customer. So customer owing to the owner. So this is one of it. An amount owing to credit supplier. This is a liability. Interest accrued on the bank loan. Interest accrued is the other payable, which is also liability. Rent received in advance from tenant. This is an income account. Income received in advance is a liability. So the answer is A. Okay, question number 3. Fatima required additional finance for her business and borrow fund from Ali. This was deposited into the business bank account. That means you debit bank. Who you borrow from? You borrow from the Ali. So this is a loan from Ali. So which account that you need to put in? Debit bank, credit. So debit bank, debit bank. So Ali is a loan. So we take loan, not a trade payable. Trade payable related to the goods. Okay. Now the answer should be A. Next question. On 1st March, a business owed its supplier 9,500. During March, the following transaction took place. Goods purchased. Okay, we open a T account. A business owed his supplier. This is a trade payable account. So balance brought down 9,500. Goods purchased on credit. This is a purchases 10,000. Goods returned to supplier. Purchases returned 200. Check paid to the supplier. This is a bank 8,900. Cash discount received 100. So this is a discount received 100. So take the debit and credit, see how much the owing. So this one is 19,500, whereas this one is 200 plus 9,000, so which is 9,200. So take this minus this. So it's a 10,300. Okay, now next. Okay, question number 5. Which document from a supplier reduced the amount owed by a customer? Reduce amount. So this one, only one document to record for the goods return, which is the credit notes. Debit notes is issued when there is undercharge by the supplier. This is when it's undercharge by the supplier. Or if there is a goods return, which is a customer sent. Customer request the deduction. Customer to supplier. Invoice is when goods is sold. Statement of account is supplier to customer is during the end of the month. So this is to chase the money or remind the outstanding. What is recorded in the petty cash book? So petty cash book is record all the small amount for the payment and the collection. Payment and the collection. But these two are the small amount for the petty cash. So all cash transaction, yes. Cash purchase and expenses only. So this one is cash purchases expenses. If the amount is big, then we will not. So this one, cash purchase expenses, we should have all in and out also. Purchase of a small value of, depending on the company, they will set the criteria for the purchase type, the nature of the purchase that can be claimed through the petty cash book. Small cash transaction. So since that these two, both are also talking about the cash transaction. As I mentioned, cash book is for the small amount for the payment and the collection. So this one is more suitable. Okay, question 7. Jacob settled the account of Ahmed, a credit supplier. He made the following entry on the credit side of his cash book. So this one, they say that he made, that means Jacob made the Ahmad. Okay. This one is trade payable. He made the following entry on the credit side of, so which is he made this one credit side, which is he bank of his cash book. Oh, sorry, he put in the cash book. There is from the cash book point. Okay, we go to cash book. So this is a cash book. In the credit side, he put Ahmad, and then he put discount $5 and 195. So for Ahmad account, Ahmad will receive the money. So Ahmad will put into here. Okay, so this amount, one bank, 195, discount receive $5. So this is what Ahmad going to have. So which entry did Jacob make in the debit side of the Ahmad account, which is this one? So in the debit side, he will record bank, discount received. So the answer should be D. Question 8. The total of the debit column of a trial balance was more than the total of the credit column. One account balance has been entered in the wrong side. So they say the trial balance, this is the trial balance, debit was more. So debit, credit. Assuming this is 1,000, this is 700, so this is more. One account balance has been entered in the wrong side. Which one was it? Wrong side, cash should be in the debit, discount received should be credit, drawing should be debit, irrecoverable debt, it should be in the debit. So which one that possible that make the amount debit more than the credit? So here, debit, debit, debit. If this all debit, if in order to make the debit more, then I make this one wrong side. So all in the debit, then it will make this one more than the credit. So the possible answer will be B. Okay, question 9. Davy prepared the following journal entry to correct an error. Sami, Samuel. Which error was being corrected? Cash paid to Samuel has been credited to Samuel. So here, the correct, an error. So this is both are the name. So this one is credit Samuel. Okay, that means this one is pay. This one should be the wrong. Okay. So cash pay to Samir, very possible. Cash pay to the Samir has been credited to the Samir. So cash pay credited to Samir. So this one cannot be, because if cash pay to Samir should be debit Samir and credit cash. So this one unlikely. Okay, next. Cash received from Samir has been debited to Samir. So cash received by right should be debit cash, credit Samuel. But we are adjusting this one. That means this is also not, because this entry by right should be correct. But they say this is credit adjusted. Goods bought from Samuel has been credited to Samuel. So goods bought should be debit purchases, credit Samuel. So credit Samuel is correct. We don't need to do adjustment. So this is also unlikely. Goods sold to Samir has been debited to, okay, goods sold means that debit Samir, credit sales. But wrongly debited to Samir, so we have to credit up. That means this is not pay. This is a transaction, goods sold. Debit Samir, credit sales. So this one is omitted. Samir is wrongly debited. So we debit Samir, credit Samir. So the answer should be donkey. Okay, question 10. A suspend account was opened with credit balance 840. Which error caused this one? So here, suspend. We have credit balance 840. So which is that in the trial balance, this is trial balance, debit, credit. Debit has more 480. So we have to put suspend in the credit side. A check for 420 received from a customer was debited to his account. So the double entry, when we debit this transaction, we should debit bank, credit trade receivable. But we made a mistake. We go and debit trade receivable. Okay. So when we debit trade receivable, this both side also debit. It will cost the amount double up. Debit is double up. So we have to adjust trade receivable, which is double up the trade receivable amount. 420 times 2, we get 840. Debit, trade receivable, credit, suspend. Okay, next. Discount allowed 420 was debited twice in the discount allowed account. So the adjustment for this one, we should debit, suspend, credit, discount allowed, but only 420. This is to reverse the wrong entry. For the C, goods cost 420 taken by owner for own use were credited to his. By right, we should debit drawing and credit purchases. Now we make a mistake. We go and credit both side drawing. When credit both side drawing, this is sitting in the credit side. I have to debit 2 times. I have to debit drawing, okay, 840, and then credit suspend 840, because they say credited to his drawing. By right should be debit. We go and credit. So now we got to reverse debit 2 times for the drawing. Okay, next is that rent received 420 was credited twice in the rent receivable account. Okay, this one credited twice. It means that our credit side rent receivable double, credit twice, that means 840. So we have to do adjustment, debit rent receivable, but only adjust to 420 and credit suspend 420. So now in all these transactions, which one is the possible? Let's look into one by one again. So this one cannot be because our adjustment, we must adjust because now credit balance here. So we must adjust in here. Okay, so this one's credit suspend is not. This one also credit suspend. This one is also not. Okay, this one is not. This one we debited suspend 400, but we want 840. Okay, this one a check for receive from customer. We debit bank credit trade receiver, but we go and debit his account, was debited his account. So we go and debited his account. Okay. When you debited it, we will cost this one both. We debit trade receivable, so 840. So in this case, I had to make adjustment. This adjustment is wrong. I have to debit suspend 840, credit trade receivable 840. So this one fill in here. So this, in this case, this should be the answer. Okay, this caused the error for the suspend credit balance because the adjustments show that we will credit trade receivable, debit suspend. The answer should be A. Okay, now next is a trader calculate her profit for the year. The following error were discovered. No entry has been made for the wages. So we debit wages and credit other payable. Okay, so the insurance expenses include prepaid. So we have to debit other receivable and credit insurance. So what is the correct profit? Okay, when we debit wages, this one will expenses increase. This one, when we credit insurance, expenses decrease. So this one profit will decrease, this one profit will increase. So in this case, this one have to minus, this one have to plus. So 14800 minus 200 plus 90. 184 minus 200 plus 90. 14690. So the answer should be B. Question 12. Jet case, the cash book show overdrawn. Overdrawn means that credit balance. Compare the cash book with the statement. It was discovered that direct debit has not yet been recorded. Okay. This is a payment in the bank statement. So he then, what was the bank balance after? So because this one is a debit, direct debit, so he has balance what now? Cash book 26. This amount we have to put into here, deduction 200. So total become 2008. So the answer should be balance carried out 2008. So balance what now will be here. So this is referred to the balance brought down, the amount transferred to here. Okay. Next question. Which item is debited in the sales ledger control account? Sales ledger control account. Cash discount. Cash discount refer in here is a discount allowed. So discount allowed is in here. Contra entry is in here. Okay. Interest on overdue, which is we customer late pay us, we charge them the interest. Provision, this one will not appear in the sales ledger control account. So they want debited. So the only choice is C. Okay. Question 14. Reloy provide the following information. May 1st, balance owed to the credit supplier. What was the balance on his purchases ledger control account on the 1st June? Purchases ledger control account. Balance owing 420. Credit purchases 900, 590. Return to credit supplier. This purchases return. Check paid to the supplier. Discount received from the supplier. Interest charged by the supplier. So this is the amount. So now let's calculate. 420 plus 590 plus 5. So we get this one 1015. This one is 110 plus 291 plus 9. So we get this one 410. So take this minus this. So we get the differences 605. The answer should be B. Okay, now let's continue. Okay, question 15. Which item should be treated as capital expenditure? Capital expenditure is a purchase of non-current asset, improvement of the non-current asset, or extension of the non-current asset. So this is the item all related to non-current asset. Next is that the annual depreciation. This depreciation is a revenue expenditure. The cost of building of office extension. So this is the one of it. Okay. The cost of repair. Repair is a revenue expenditure. The purchase of a new computer for resales. For resales means that this is a goods. So this is a purchases, not a capital expenditure. This is revenue expenditure. So the answer should be B. On the last day of the financial year, Khalid purchased office fitting 900. This was incorrectly recorded as office expenses. Office fitting non-current asset. Khalid does not charge depreciation in the year of purchase. What was the effect on the profit for the year? So this 90 incorrectly treated as 90, that means this will charge as expenses. Expenses increase, profit will decrease. So since that no depreciation charge, the amount that profit adjusted, affected will be under by 90 only. Okay, because they say no depreciation charge, so no need to think about depreciation, just think about the effect of this amount. Okay, question 17. Angie is a trader. She used the following method of depreciation for different type of non-current asset. Straight line 20, reducing balance 25, revaluation. On 1st January year 1, Angie purchased small item of equipment cost of a total 2004 and fitting cost 8,000. On 31st December year 2, Angie estimate the equipment was worth 70% of the original cost. The statement of financial position show the net book value of equipment as 1680 and fitting as which depreciation method as Angie is used. So we see one by one first. Okay, too many things to see. Equipment cost. So we think about equipment cost first. Equipment cost is 2004. And then this is the first year. If I use straight line, 20% depreciation will be 2004 times 20%, 480. If I use the reducing balance, so first year will be the same. Second year, this one will be the same. This one will change. We'll take 2004 minus 4008 times 20%. 2004 minus 480 times 20%. So we get 384. So the accumulated depreciation, we have these two amount plus 480, we get 864. Okay, the net book value, if we're using the reducing balance, this is a reducing balance. And second year, estimate the equipment cost worth 70% of the original. So 70% means that 2004 times 70%. So I get 2004 times 70%, which is 1680. So this is what I have. Okay, and then so if I use the reducing straight line, my cost for the second year, the net book value, I should get 2400 minus 480 times 2. So I should get 144. So I cannot get the same. So this one cannot be the straight line. If I use the reducing balance, second year, I will get 2004 minus 86. Okay. Okay, 864. So I will get 2400 minus 864, which is 1530. So in this case, these two also I cannot get this amount. That means this should be using revaluation method. For the 17th, possible for equipment is revaluation. So these two possible answer. Where I'll come to the fitting. Fitting is 25% per annum. So if I calculate for the straight line, this is for the fitting. Straight line is taking the 8,000 times 25%, which is the 2,000. So second year, if reducing balance, second year, this is second year, first year will be the same. So I take 8,000 minus 2,000, and then I times 25%. 1,005. So this is the amount I have. And then second year, fitting is left with the 4,008. Okay, here 25%. I get 4,008. So 8,000, I minus straight line, I will get 4,000. If I using reducing balance, 2,000 plus 1,005. So 8,000 minus 3,005. I get 4,005. So both also I didn't get it. Where's the mistake? The fitting cost 8,000. Okay. So 8,000 times 10 straight line. Oh, this is a reducing balance. These both are reducing balance. I think I do mistake already this question. Okay. Let me redo the working. I need to recalculate the working. Wait, let me put in first. Okay, we do the This one for the equipment first. So equipment is the straight line method. First year, we take 2004 divide times 20%. Straight line is 20%. So I get 2004 times 20% is 480. Okay, second year will be the same, also 480. So the second year, the net book value will be 2004 minus 4008 plus 4008. So I should get 2004 minus 4008 minus 4008, which is 1440. Whereas if I use reducing balance, first year, same amount of, or reducing is 25%. So I take 25%. So which is I get 2004 times 25, which is 600. So second year is 2004 minus 600 and then times 25%. So I get second year amount is 2004 minus 600 times 25%, which is 450. So the net book value for the reducing balance will be 2004 minus 600 plus 450. So equal to 2400 minus 600 minus 450, which is 1350. So both also not appear the amount because they say the amount is 168. So this not same. So this one most probably will be the evaluation. So the next one for the next item is fitting. Fitting is straight line will be the first year. First year is how much? 8,000 times 20%, which is 1,006. Second year will be the same. So 1,006. Second year also 1,006. Then the net book value is 8,000 minus 1,006 times 2. So we get 8,000 minus 3,002. So 4,800. And then reducing balance, which is first year, we get same amount. No, because 25%. So times 25% will be 2,000. So second year will be 8,000. 8,000 minus 2,000 times 25%. So we get 6,000. 1,005. So net book value will be 8,000 minus 2,000 plus 1,005. So we get Let me count. 8,000 minus 3,005, 4,005. So this is the book value that we get. So now we compare which one that the same. Okay, here they say the second year 4,008. So this one 4,008. That means they are using straight line method. Straight line method. So the answer should be C. Okay, now next move on. 18. Abiel prepare financial statement to 31st December each year. Okay, machinery cost 40,000. He charged depreciation 20%, reducing balance. Depreciation charged in the year of purchase but not year of disposal. On the 1st Jan year 3, the machinery was sold for 22,000. So this one, 3rd year, but sold on 1st Jan. They mean only 2-year depreciation charge. So 2-year depreciation charge, first year is 40,000 times 20%. So we get 40,000 times 20%, we get 8,000. Second year, we take 40,000 minus 8,000 and then times 20%. So we get 6,004. So 2-year depreciation, 8,000 plus 6,004, we get 14,400. Now, next is that our net book value when upon disposal is 40,000 minus 14,400. So 40 plus 40 minus, so we get 25,600. Then after that, they sold for this 22. Compare these two, we making a loss. Okay, this net book value higher than this one. The differences is 3,006. So make a loss for the 3,006. So this is a loss. So loss will be debit income statement, debit income statement, debit income statement, and credit disposal. So answer should be donkey. Okay, next move on. Okay, question 19. Why will a business record the amount owing by a credit customer as an irrecoverable debt? Irrecoverable debt is confirmed customer won't pay. Okay, the customer has gone out of a business. The customer has a liquidity problem. Liquidity problem means that they can't immediately pay. They may have a problem to pay. The customer is making losses. Making losses is nothing to do with the business so long as they're still running the business. Customer is not satisfied with the goods. When not satisfied, we will not give irrecoverable back. We will give discount maybe as a compensation. So here, the answer should be has gone out of a business. That means cannot find him already. Angie maintained a provision for doubtful debt 5% of the trade receivable at the end of each financial year. At the start of the financial year, the trade receivable were 2,000. At the end of financial year, the trade receivable is 4,005, which would be the making it to the income statement. So first of all, open the provision for doubtful debt. For the balance breakdown, we take 2,000 times 5%. For the balance carry down, we did 4,005 times 5%. So calculate the amount and find the differences. So this one is 100. 4,005 is 225. So this is an increase. So income statement will be in here, 125. So the double entry will be debit income statement, credit provision for double debt. Debit income statement is expenses. So the answer should be A. Okay, question 21. Which business do not prepare a trading. Trading means got the goods or got the inventory. Okay. Furniture shop. Furniture is the goods. Insurance company is providing the service to the client. Okay. Next, news agent buy newspaper, sell newspaper. Toy shop buy toy and sell toys. Window cleaning. Window cleaning provide the services. So should be 2 and 5. Okay, now next. 22. A business provide the following: current asset, current liability, non-current. Capital is an asset minus liability. So this one plus, this one minus, this one plus, this one minus. So calculate 25,000 minus 12 plus 18 minus 21, 10,000. So the capital should be 10,000. 23. A trader bought a machine for use in the business. He paid a part of the cost in cash and agreed to pay the remaining part in 15-month times. In addition to the non-current asset, which item in the statement of financial will increase as a result of this transaction? So the double entry is debit machinery and credit. He paid part in cash, credit cash, and he also agreed pay remainder in the 15 month. So this is a other payable. Because this one is a 15 month, more than 1 year. So this one is under the non-current liability. Okay, because he paid more than 1 year. This is under non-current liability, more than 1 year. So the double entry, current asset, here current asset, this one is involved, which is a credit, but they want increase as a result. So this is a decrease, cash decrease. So this one is not increase, it's a decrease. Current liability, because this is a more than 15 month. So this is also not for under the current. This one should be under non-current. So in this case, these two cross, this one increase. So the answer should be donkey. Number 24. What is the purpose of the partnership appropriation account? To calculate partnership salary, partner salary. This one, appropriation account, partner salary, you can calculate from your this agreement. Okay, partnership agreement. To record partner drawing, this under the current account, you will do the recording. To show the distribution of the profit between the partner, there is a purpose of the appropriation account to show the calculation how to get the share of the profit. Okay, question 25. James is a partner. He make loan to the business and receive the loan interest. What is the double entry in the book for the loan interest James received? The double entry will be debit interest on loan and credit, because we didn't pay. If we didn't pay, then we go to the current account. If we pay, then after that you go through the bank to pay it up. So the answer should be C. Okay. Okay, 25. Let me see. Okay. What is the double entry in the book for the loan interest James has? Oh, sorry. Here has received. That means we already pay it. When we pay it, we have to use the bank to pay it up. So the answer should be B. If the loan have not paid, that means we should credit to the current account. So the answer should be B. Okay, question 26. A limited company whose capital consists of ordinary share ceased trading and was not paid for its debt. Which statement is correct? So this one is a limited company. This is a limited liability. So limited liability, shareholder don't need to pay the debt. Shareholder will have to pay the proportion of the debt. So this is not. Shareholder will have to pay proportion of the based on this is also not. Okay, next is shareholder will have to sell the personal possession. This one is also not because this is a limited liability for the limited company. Shareholder would lose the money that was paid when the share was burst. So this should be the answer for it, 26. Okay, 27. A limited company was formed on 1st June 2021. On that day, company issued 500 unit share, $1. Shareholder were asked to pay 60% cost immediately, with the remainder being payable on 1st June. By 1st, all shareholder pay what was due on that day. What was the share capital of the company on 1st August? So here, 500,000 unit times $1. Call for the 60%. So it will be 500 times 60, which is 300,000 collected. So this is a call of capital. Okay. Next is that payout. You call people and then people has pay what they due. So this is what they have paid up. So the payout capital is this one. So the total should be 300. So what is the share issue? If the question change it to the share issue share, okay, or share issue, the share issue will be 500,000. Okay, you call on this date. Call on this date to pay 60%. And on this date, you receive the money. This is called payout. So the answer should be B. So issue share, 500,000. Okay, question 28. There are 120 members of a sport club. The annual subscription is $60. At the beginning year, no member has paid in advance and no member subscription outstanding. That means no balance brought down, balance carried. No balance brought down for the subscription account. So this is subscription account. We have 120 annual subscription. That means total is 1 times, which is 7,002. 7,002, this is the total, which is the income and expenditure amount, 7,200. At the end of the year, 7 member has not paid. 7 member has not paid is a balance carried out. You take 60 times 7. This is asset. So 60 times 7, 420. 3 member pay in advance. That means balance carried out liability here. 3 times 60, 180. So what is the amount that will show for the subscription in the income and expenditure? This one, they ask for this one. Okay, they are not asking for the bank. I thought they're asking for the bank, but they are not asking. So the answer should be this one, 7,200. Okay, the next one. So be careful the last sentence. Initially I thought they call for the bank. Okay, now next is question 29. What is shown in the manufacturing account? Manufacturing account, you will get material cost. Finished good is under the income statement. Cost of production, you will show in the last. Cost of sales is under income statement. So only 1 and 3. So the answer should be B. Okay, now next is Tari provide a statement of affairs at 31st year 1 and year 2. During the year 2, his long-term loan increased by, okay, we put in the information better. Year 1, year 2, and loan increased by 3,000, and his net current asset means that current asset minus current liability decreased by, this is increased, this is decreased by 1,000. Depreciation for the year was, depreciation means related to the non-current asset. So non-current asset for the year, depreciation during the year 2. So that means this decreased by 500. So by how much did the total capital came? This is the non-current liability. Okay, this one current net current asset. So capital is asset minus liability. So asset minus liability. This one is decrease. Decrease 1,005 minus increase. So we should reduce by 4,005. So the answer should be D. Okay. Okay, now next move on. 31. What is the gross profit? Okay, gross profit margin is taking this times this. So 2,900,000 times 100. Gross profit margin 2,900 divided 1,208 times 100, which is 22.66%. So the answer should be A. Okay, now next is a trader provide the following information for the year ended. Total cash and credit purchase of the goods for resales. This is the purchases. Cash purchase of the goods for resales. So the credit purchase of the non-current asset. Total cash and credit for the goods for resales. So the differences between these two. 150 minus 17. So 133. This is a credit purchases. Okay, credit purchase of the non-current asset. His trade payable at the date is 8,000. What was the trade payable turnover? Trade payable turnover is a trade payable over the credit purchases times 365 days. So we take trade payable 8,000 and then credit purchases 1,300 times 365. So let's count 8,000 divide 13300 times. So we get 6 point. Credit. It's my mistake. His trade payable. I calculate wrongly. 8,000 divide 13300 times 365 days. I get 21.95. So it should be 22. So the answer should be C. Okay, now next. A trader decided to reduce her level of inventory in order to reduce the storage costs. Okay, sales quantity and selling price were not affected. How did this affect the profit for the year and the rate of inventory turnover? So we prepare the income statement, revenue minus cost of sales, opening inventory purchases, closing inventory, gross profit. So here they decide to reduce the level of inventory. Okay, so that means, let's say example, so this one is 1,000, this one is 700. That is the reduced lesser amount. Closing inventory lesser. So when closing is reduced, then this amount, let's say cost of sales it will be increased. This one no change. Let's assume I put 10,000 here. Okay, my purchases assuming no change, 700. Okay, 7,000. So I get 7,000, 8,000 minus 700. So I get 7,003. Then minus 10,000. So I get 2,007. If this one remains same, the level of inventory remain the same. So in this case, I will have this one 1,000, 7,000, 1,000. So the end is 7,000. So you notice that closing inventory reduce, gross profit will reduce. So when this closing inventory reduce, gross profit reduce, profit for the year will reduce. So decrease, decrease. Next, rate of inventory turnover. Rate of inventory turnover, the formula is a cost of sales over the average inventory. So cost of sales, this is a cost of sales, cost of sales. So you take the 7,003 over the average inventory. This is using the number to calculate, easier to see the impact. So 7,000 divided 2. So this one we get about 8.6 times. But if you are using this one, 7,000 over 1,000 plus 1,000 divided by 2, we will get 7 times. So you notice that follow the formula when closing inventory decrease, rate of inventory turnover increase. So this one reduce, this one will increase. So the answer should be increased. So in this case, the answer should be B. Okay, the answer is not like. Let me see. Where's my mistake? The answer given is not. Let's see where is it. Selling quantity, selling price not affected. Level of inventory in reduce. Level of inventory reduce. This one, we get 7,000. 333. Why the putting this one increase? Reduce her level of inventory. Closing inventory reduce. Gross profit will reduce. Profit will reduce. This one no change, no change. Purchases no change. This one is 8,000. 8,000 minus 700. You get 7,003 minus 10,000. So we get 2,007. Whereas this one is reduced. This one assuming same. So this one 7,000. 3,000. This one decrease. When this one decrease, gross profit decrease. Profit should be decreased. But why they put increase? How did this affect profit for the year? Reduce. Based on my working in here, this is the financial impact. I saw that closing inventory decrease, gross profit decrease. Gross profit decrease, profit will decrease. Okay, is there because of the reduce the storage cost? Okay, what I can guess for it because of this sentence. Because when we reduce the cost, expenses reduce, profit will increase. So this amount, that's the reason why here the answer they given is donkey. Okay, they given the answer increase because of this one. Storage cost decrease, expenses decrease, profit increase. Okay, now, and the impact for storage cost more than the impact on the decrease of the closing inventory. So that's the reason why here there's the answer donkey. Okay, now question 34. Azim and Basir are both sole traded. They provide the following: profit before interest, long-term loan capital. What was the, okay, ROCE? So ROCE formula is a profit before interest over the capital employed. Capital employed is a capital plus non-current liability. So which is that for Azim is 17200 divide 8600. And then for Basir is 15,000 over 12,500 plus 25. So Azim got Azim got 0.2 times, that means 20%. Okay, then Basir is 12500 plus 2500, 3375. 40%. This is 40%. So Azim is a double. No, this is wrong. Half. Yes, half of Basim. So the answer should be B. Okay, the next one. Tiffany, major competitor, has invested in a new machine for making goods more cheaper. Okay, non-current asset. Stephanie knows this will affect her sales but did not record in the accounting. Which account principle? Okay, going concerns talking about the business continue forever. Materiality is talking a significant amount to be recorded as a non-current asset or expenses. Money measurement is talking about the amount that we can record into the book must based on the the monetary term that we have, that we receive, we purchase, but not based on the judgment, personal opinion to do the recording. Prudence, not to overstate the profit and the asset. So the answer should be money measurement, because he did not record the sales, because this one not record sales, sales has not come out yet, has not confirmed the amount yet. Okay. So that is for this paper.